What's up, y'all? It's Devin. And for those who don't know, on this channel, I help you launch and scale investments funds, raise smart capital, and navigate the crypto markets without getting finessed by complexity or compliance. Now, if you've ever asked, where do I park capital that earns yield without acting like a full-time trader? Or how can I get Bitcoin exposure without rolling the dice every time Jerome Powell speaks? This one is for you. And today, we're talking about STRC, or MicroStrategy's new stretch product. Let me go ahead and bring it up here. This is straight up MicroStrategy's new financial weapon at 9% yield, monthly cash flow, and it sits on top of over 600,000 Bitcoin like a crown jewel. This is not a hype coin. It's not TradeFi trying to act young. It's what short duration capital would look like if it grew up in the Bitcoin era. So let's get into this because I really want to dive into all of this stuff. So let me paint a picture here right now for you. You're probably sitting on a Chase business account earning 4%, which is you're feeling pretty good about yourself. Congratulations. Like you finally figured out this whole yield thing, except you didn't, because inflation is chewing through your returns. Like you ordered from Uber Eats. Every time you pull up your account, it's still denominated in dollars, a currency that's been quietly losing muscle mass since 1971. But MicroStrategy, they've come through with something different. STRC pays 9% monthly, and it's designed to keep its price locked to $100 like it's chained to a vault. Except the vault is made of Bitcoin, unlevered, cold stored, no funny business. This is not an appreciation play. This is for capital that wants to sit down, relax, and still win, which is fantastic. Now, what is STRC? STRC is what happens when a software company gets tired of playing by Wall Street's rules and starts building its own rules. And on paper, it's a variable rate preferred stock. But let's be real, it's more like a grown-up version of a savings account. If your saving account had yield, redemption rights, Bitcoin collateral, and wasn't trying to rob you of every single quarter because it's the bank and it's dictated by Jerome Powell and the Fed, here's what it really does. It pays you 9% annual yield, drops you cash every single month, stays glued to $100, and then gives MicroStrategy tools to defend that $100 in real time. And it sits senior in the capital stack, meaning your capital's not at the bottom of the barrel. So if something happens, everybody else gets their money before you. It's the cleanest mix I've seen of stability, liquidity, and exposure to Bitcoin without you needing to know how to use a ledger or download MetaMask or a Coinbase wallet. This isn't financial cosplay, it's real structure built by people who actually know what a treasury is supposed to do. Now, here's the problem. Let's talk about the default setting for most people with money right now. You're sitting on a 3.5%, 5% yield instrument, some bond fund, some enhanced saving accounts, some banker with gelled hair told you this is the responsible move from Northwestern Mutual or something, some young kid straight out of college. And now you're watching the same dollars earn a yield that barely covers your lunch bill while Bitcoin compounds on your friends over accidentally up 80%, right? You're not being conservative. You're being slowly drained just in style because everybody else is doing it and this young guy told you you should do it. The problem isn't your ambition, it's where you're allocating your funds. STRC fixes that by giving you an income producing, price stable, Bitcoin backed position, and it doesn't ask you to be a tech bro or a Bitcoin maxi or options trader to understand it. Now, the myth here is that, like, if we kill the lie that Bitcoin exposure equals chaos, you've heard this drill over and over. You want to get into Bitcoin. You better know how to cold store keys, monitor the macro cycle, or survive an 80% drawdown while everyone calls you crazy. No thanks, right? You want to protect your money. And honestly, this stretch is a little bit more of an institutional grade product, and they're not going to play by those rules. So that's what stretch wipes out. You don't need to ride the volatility. You don't need to check your phone 10 times a day wondering what Jerome Powell says, and that's going to change the market and tank your savings. You don't need to explain to your spouse why this dip is different, baby. I promise we're going to really make it through, which my wife is absolutely tired of hearing. With STRC, you earn cash monthly from a company that's literally built its capital structure around accumulating Bitcoin on autopilot and at like 11x of what they're holding in cash, which is insane. This is Bitcoin exposure for people who think in spreadsheets, not trading view charts, which can be confusing. Now, This is how STRC works. Let me slow it down. Let me take it back. Let me pump my brakes. I'm doing 55 and a 30. STRC has one mission: yield without drama. Here's how it works. It's got a fixed $100 par value. You earn 9% yield paid monthly. That dividend can adjust up or down based on market demand. MicroStrategy can redeem shares at $100 plus accrued. They can also control supply using ATM or at the market value issuance. And it's all backed by a mountain of cold stored Bitcoin. If the price runs hot, they adjust the dividend. You get that. If it slips, they pull back issuance or redeem shares to close the gap. It's like a thermostat for yield, except instead of air, you're controlling capital flows. That's what happens. Most income products absorb volatility. STRC actively resists the volatility here. So it's backed by this massive holding. You get paid the dividend if it goes up, but they throttle it and control it if it goes down, so you still don't lose. Let's look under the hood. What is this? Let's talk about dividends like an adult. Most preferred shares are fixed, which sounds safe until the market moves and you're stuck holding a yield that suddenly looks like a joke. STRC flips that. Its yield adjusts monthly. So if market demand cools, MicroStrategy dials up the dividend to attract more capital. If it gets too hot and trades above 100, they ease it off and lower it within defined parameters. And there's protection baked in. Dividends can't fall below 1 month SOFR, which is the secured overnight financial rate. Reductions are capped, and if you ever miss a dividend, that thing accrues with interest. So you get that dividend back with interest. Translation, you're not guessing, you're not hoping, you're structurally protected by legal design. It's yield with a brain because it's backed by something that's solid. It's backed by something that that has a firm foundation on it, and it's incredible. Now, let's talk about redemptions and at the market control. Let me tell you what separates this from most products. STRC has real tools to defend itself. If price ever dips below $100, MicroStrategy can redeem shares on the spot, right then and there, paying you $100 plus anything you're owed. No waiting, no negotiations. And if demand goes crazy, they can release new shares into the market through their ATM program. Think of it like dynamic supply and demand control, except you're not pegged to emotion or liquidity panic. It's engineered, pre-planned, and executed at the corporate level. This is the opposite of every NFT, DAO, or token that we saw collapse on Twitter. This is what grown-up capital innovation looks like right here. Now let's talk about the collateral layer. This is where STRC quietly flexes on every other income product out there. This is not "we hope the cash flow holds up" type of collateral, or not the "we got a line of credit from Wells Fargo" type of collateral. We're talking Bitcoin. Cold, stored, untouched. MicroStrategy is the same company that's been buying Bitcoin since before most institutions had a policy on it. It's sitting on 607,000 Bitcoin. That's not theoretical. That's not a promise. That's a real public auditable wallet holding billions in the most scarce asset on earth, not a bank saying, "Hey, we've got your money," and don't really actually have to hold your money. They're investing it somewhere else. And STRC is backed by that pile of Bitcoin. Right now, the BTC rating is 7, meaning for every $1 in STRC issued, there's $7 worth of Bitcoin backing it. Let me say that again. You're earning 9% cash yield from a product that has 7 times more collateral than it needs. Most bonds are barely covered 1-to-1. Some of these REITs out there are lucky if their properties are even worth what's on paper. But this is over collateralized, like it was designed by a paranoid math major. And I honestly, I respect it. I'm telling you, I really do. Now, let's talk about this reflexive stack. We're going to enter into the boss level territory of this. STRC isn't just sitting pretty on top of some Bitcoin. It's part of a reflexive, right? It adjusts capital machine. So let me explain this. MicroStrategy has multiple products in its capital stack. STRD, that's its kind of junior layer. STRK, which is its mid-level fixed yield. STRF is the long-term senior preferred that they give. And then STRC is sitting above them with flexibility and seniority. Now, here's the wild part. Every time they issue a junior instrument like STRD or STRK, that new capital is used to buy more Bitcoin. More Bitcoin equals stronger asset base. Stronger asset base equals better coverage ratio for STRC, which means STRC becomes even more secure without changing anything. And here's where it just loops all into itself. The more secure STRC gets, the lower yield MicroStrategy has to offer. The cheaper their capital becomes, the more capital they can raise, the more Bitcoin they can buy, the stronger the whole stack becomes. It's reflexive, it feeds itself. It's like a self-scaling flywheel of yield, security, and Bitcoin accumulation. You don't get that from traditional preferred shares or prefs from other funds or things that you're in. You definitely don't get it from bonds, and you for sure don't get it from staking your tokens on a crypto site that goes dark mid-cycle and then you can't get your money back from the staking pool. This is how corporate Bitcoin finance becomes a thing right here. This is what attracts institutions and institutional investors, and this becomes massively adopted. This is the protection people have been looking for with BTC. Now, let's dive deeper into this BTC rating idea because it's low-key genius. This is amazing. When you hear 7x BTC rating, that's not just cool sounding number. That's a ratio. For every $1 MicroStrategy owes STRC holders, they've got $7 in Bitcoin sitting right underneath it. Now, here's the best part. That number doesn't stay fixed. It's not like some static bond coverage metric that erodes over time because Bitcoin appreciates. Convertible debt equalizes it, and more major instruments are issued, and the balance sheet just keeps leveling up. So the 7x rating can become 10x, then 12x, then 15x, just organically by itself. No fancy footwork needed here. You don't need a restructuring event. You don't need a liquidity injection. You don't need the Fed to pivot or stake your life on Jerome Powell and what he says at the next meeting. All you need is time and Bitcoin doing what Bitcoin does. The longer you hold STRC, the stronger the security behind it gets. That's rare air. This is incredible. And when was the last time that you could say that about any fixed product? Now, here's some use cases for you. Who is this really for? Let's be honest. It's not for everybody. So if you're trying to 10x your portfolio by Friday, keep it moving. Go get on some meme coin. Go do something else. STRC isn't that type of party. This is for people playing the long game. It's for operators, capital allocators, fund managers, family offices, folks sitting on idle cash asking, where can I earn decent yield without losing sleep or sacrificing upside because I want both? I'm a smart, savvy investor. Because here's what STRC gives you. It gives you monthly income, consistently monthly yield. It gives you price stability and exposure to Bitcoin. It gives you par value protection, and then no equity swings and no technical learning curve. You don't really have to learn much about it at all. It's amazing. You've got all this upside, freedom from swings, institutional grade finance product, and you don't need to know how to stake, yield farm, or bridge to Solana. You don't need to set alerts for CPI data and macro announcements or every time Jerome Powell and Donald Trump get into a fight. You just collect your checks, watch Bitcoin do its thing, and sleep peacefully knowing you're in an instrument that was built with real collateral and real control. This isn't retail. This is what post-fiat fixed income is supposed to feel like. All right, quick sidebar here. Let's say that you love this STRC breakdown and you get the value of structure, you like clean design, you're raising capital for your own deals or your own fund, but your back end is looking like a Craigslist operation. Spreadsheets everywhere, investor notes lost in your inbox. Some guy named Matt B just wired money and you're not sure which deal it's for. Yeah, I built FundFlow OS for that exact chaos. It's the CRM I wish I had when I first started raising capital and launching my fund. And here's what it does. It tracks every investor and commitment, sends automated updates and email workflows, stores your docs legally and logically, and helps you to close more capital without dropping the ball. It's like giving your backend a compliance officer, a marketing assistant, and a CRM brain all in one login. So if you're tired of pretending Google Sheets is a real investor portal, head to fundflowos.com/fire or click the link in the description. Let's get your capital raise running like the asset it's supposed to be. Now, back to STRC. So let's land the plane here and talk about why STRC is actually different. Because in a world where most yield plays are just risk dressed up in PowerPoint, this one is actually built to hold. Here's your cheat sheet here. It's got 9% yield monthly, not quarterly, not when the Dow votes on it. It's pegged to $100 and backed with real redemption tools. It's over collateralized with literal Bitcoin, not hopes, not houses, not hedge math. It's built by a company with actual skin in the game with over $40 billion in Bitcoin, which is crazy. It's structured to get stronger over time, not weaker with scale. And listen, you've heard of all these new financial products over the years that I've lived through some of these seasons, the staking wars, DeFi summer, and every protocol that promised low risk and disappeared by winter. But this is a Bitcoin native yield instrument that plays by SEC rules, pays like a corporate bond, and moves like a stable coin. You're not just holding capital here, you're placing it in a structure that gets better as the system grows. That's rare. So, what I want to leave you with, you don't have to buy Bitcoin to benefit from Bitcoin. That's what STRC unlocks. You don't need cold storage, Twitter alerts, a Deegan score, or the ability to stomach 30% drops while reading Michael Saylor's tweets at 2 a.m. You just need clarity and the willingness to reposition some of your capital into a structure that protects you and rewards you. STRC is what a modern short duration yield product should look like. Stable, flexible, overbuilt, Bitcoin backed, and unapologetically boring in the best possible way. Because at the end of the day, the best possible performing capital is the capital you don't have to babysit. So if this breakdown hit for you, like if you like this, make sure you subscribe. I want to drop more videos like this that help real people, not just hedge funds, understand capital, compliance, and crypto without the condescension that you hear all these people talk about. And if you want me to break down any of the other MicroStrategy capital stacks, drop that in the comments. And if you're serious about raising capital, building trust with investors, and closing faster without feeling like you're making it all up on the go, you can go to fundflowos.com, or I can actually help you launch and scale your own investment fund so you can do this like a pro. You can visit us at wearefundfounders.com/apply, and we will take care of you. I appreciate y'all watching this, and to great success and greater impact. Peace.